Hey everybody, G. Kelley Dixon here, Englestone Real Estate Venture Partners. I got a unique video for you, and it's something that I'm paying attention to because I just want to give you the insight of how some of the wealthiest people in the world are kind of positioning themselves for what they feel to be strong investments that will benefit them in the future. So I was reading article in the journal about Africa's richest man, Aliko Dangote. I'm probably pronouncing that wrong. He's amassed a fortune of about $15 billion, and he's basically betting his whole net worth on an oil project that is set to kind of revolutionize the Nigerian oil economy. And, I understand if you're out there, what does this have to do with real estate? It has a lot to do with real estate, but more importantly, it has a lot to do with what he feels is the commodities are going to really be worth. So right now, oil is down. If you watched my other previous videos, we talked about how the Fed has kind of shifted their stance on inflation, which is like, we're basically saying before we worked very hard to try to keep inflation at 2% or less. Now, we're not going to try to keep it at 2% or less. We just want it to average 2%. So if 1 year it's 1%, then we don't mind it jumping to 3%. Or 1 year we're at 0% or negative, we don't mind it jumping to 4%. You see where we're going with this. So the question is, if you have inflation coming, what is going to inflate? And oil is expected to be one of those things that are going to inflate. So what he's really banking on, and that any commodity buyer is banking on, is the fact that the dollar is going to be weaker in the future. So if you're somebody that says, I'm going to buy gold as a hedge, you should own gold, you should own commodities. What you're really banking on is, will the dollar be weaker in the future than it is now? And I talked to a lot of Forex traders, and the thing that they point out is that the dollar actually is going to be stronger against other fiat currencies, which I agree with. I think the dollar will perform better. I mean, again, the U.S. is the ugliest girl at the prettiest girl at the ugly girl dance. The thing about the dollar is that we have the reserve currency of the world. So it's going to be very difficult for those other currencies to beat the dollar long term. We're not talking about digital currency. Again, we're talking about fiat currency. So as the money supply expands, and it seems like money supply is going to continue to expand, basically all fiat currency markets or central banks, are they going to continue to print money? And the answer to that is yes. The thing is now, what pace are these different central banks printing the money? Are we outpacing our other countries as far as the rate in which we print money? So it's not necessarily if the dollar's stronger versus another currency or not. It's who's devaluing their currency faster by printing more capital. From the looks of things right now, it seems like the U.S. is in the lead, which means that we're going to have downward pressure on the dollar, which is why the Fed is quote-unquote saying that we're allowing more inflation, because in some way, shape, or form, it's almost like they have to in order to really avoid high unemployment, which is really political suicide for any politician that jumps into office. So we'd rather have rising prices over high unemployment. So at least if people are employed, they have money. They can't buy what they used to, but hey, at least they have something coming in. So the bet here, again, is that he's betting his entire fortune that the dollar is going to get devalued. Now, I know you're saying, well, this is a man in Africa. People don't just have a net worth of $15 billion and they don't have any type of intelligence. Warren Buffett has been making plays on gold recently, and Warren Buffett is not a gold guy. So if you're looking at this, what it's telling you is that the dollar is going to devalue. So investment strategies here now is that if you're investing, you should be trying to necessarily get rid of cash and into other things that are going to be a benefit of the dollar devaluing long term. if not in the short term, you should at least be hedging yourself in case the dollar completely takes a snow dive and we have potentially hyperinflation, which I'm not a believer that that's going to happen soon, but I know a lot of economists are. I'm not an economist, I'm an investor. I don't believe that's the case though. But you do have to prepare for downward pressure. And the reality is, unfortunately, with low interest rates and high inflation, if you're saving your money, which is what the underlying lesson here is, if you're saving your money in a bank account, then you're losing. And if inflation increases, you're going to be losing money at a lot faster pace by keeping your money in the bank. So you definitely should be looking for some type of yield and not holding or hoarding cash other than maybe a rainy day fund. You need to be in investments, and particularly investments that are going to start yielding you back cash, which you can in turn gather and reinvest into something that again is giving you more return. I would coin this the death of the dollar, but again, we're the prettiest girl at the ugliest girl dance, and we're also the world's currency. I don't know how much longer these countries allow us to rip them off, but that's another story. In any event, as it pertains to real estate and cash, you want to diversify and be in assets, but you also want to be in commodities as well. And obviously gold, silver, precious metals, they definitely have a negative correlation between the devaluing of the dollar and their value going up. And anything that has a negative correlation with the dollar decreasing in value over time is probably going to be a wise investment in the future. Again, G. Kelley Dixon, Anglestone Real Estate. For more videos like this, view our webpage, subscribe to our channel, and also be on the lookout for social media content as well.